You ever wonder what really separates a struggling new trader from a consistently profitable one? Well, it often just boils down to one simple word: emotion. Today, we're going to dive into the blueprint of how one trader went from making gut decisions to building a cold, hard system. Let's see how they pulled it off.
And this slide, well, it gets right to the heart of it all. The source material lays out a super clear line in the sand. You've got new traders on one side, driven by fear and greed, which, puts them at a huge disadvantage. And on the other side, successful traders who follow systems, giving them a serious edge. Our entire journey today is about figuring out how to get from the left side of this screen to the right.
So, where do you even begin? Well, the very first step is to stop looking at everything and start hunting for something specific. It's all about building a filter to sift through the thousands of stocks out there and find the true potential leaders.
And this is where that filter gets really specific. We're not talking about vague ideas here. The system looks for stocks that are within 5% of their all-time highs and that trade over 5 million shares a day. But what's crucial is that they also have to have strong fundamentals. We're talking sales and earnings growth over 20% year over year, and of course, some kind of innovative edge. It's basically a checklist designed to find strength. And here's what that filter looks like in the real world. This just illustrates it perfectly. On the left, you've got Amazon, a chart that just screams strength and momentum. Then on the right, you have Macy's, which is clearly in a long-term decline. That filter is designed to put charts like Amazon on your radar and make sure you don't even waste a second looking at charts like Macy's.
All right, so once you have your watch list full of strong companies, the next step is all about timing. And for that, we've got to turn to the charts. It's about learning to read the visual language of the market so you know exactly when to make your move.
Okay, take a look at this chart of Apple. This is a textbook uptrend. See how the price is making a series of higher highs and higher lows? And notice how it consistently stays above those smooth, curving lines? So, what exactly are those lines doing there?
Well, they're called moving averages, and they are one of the most fundamental tools for a trader. All they do is plot the average closing price over a set number of days, say 10, 20, or 50. Their real power is that they smooth out all the choppy, day-to-day noise, and they give us a really clear picture of which way the underlying trend is actually heading. Now, let's flip it and look at the opposite. This is Groupon. See the difference? The price is consistently trading below the moving averages. So instead of acting like a floor of support like they did with Apple, here they're acting as a ceiling of resistance. They keep pushing the price back down every time it even tries to rally. So the huge realization, the crucial point that the trader in our story discovered was this. In the absolute strongest stocks, the fastest average, that little 10-day line, often acts as a dynamic support level. It becomes the key spot where buyers tend to jump in during small pullbacks. And that observation, well, it's the key to the entire entry system.
Okay, so we've figured out what to look for, and we've learned how to read the trend. Now it's time to put it all together. This is where the rubber meets the road, turning all those observations and rules into a repeatable, actionable trading plan.
And here's the blueprint, laid out in 4 simple steps. First, you find a strong stock from your filtered list that's in a clear uptrend. Step 2, you wait for the price to pull back and bounce right off that 10-day moving average. That's your green light. Step 3, and this is absolutely critical, you define your risk immediately by placing a stop loss 5% below where you bought it. And finally, step 4 is having a plan to lock in those profits. In this case, using that same 10-day moving average as a trailing stop. This just means you sell if the stock closes below that line. See? There's no guesswork. Every variable is defined before the trade is even placed.
But even a great system for trading a great stock can fail if the entire market is falling apart. So the trader added one final layer of protection. Think of it like a master switch for the whole system.
And this, right here, this is that switch. The system is only turned on if the broader market, the S&P 500, is also in a healthy uptrend. This just makes sure you're always trading with the wind at your back. If the market is weak, the system tells you to sit on your hands and protect your cash, no matter how good an individual stock might look.
And last but not least, a simple but really powerful rule for managing your money. No single trade can ever be more than 20% of the entire account. This rule makes sure that even if you hit a string of losses, it won't knock you out of the game. It's all about survival and staying power.
So there you have it, a complete system, from start to finish. But the source material leaves us with one last piece of wisdom. And honestly, it might be the most important part of this whole thing. It takes this beyond just a simple set of rules.
This. This is the key takeaway. The whole point isn't to just copy this exact blueprint. The goal is to understand the principles behind it, filtering for strength, defining your entries, and managing your risk, and then build a system that really fits your personality and how much risk you can handle, a system that you can truly 100% believe in.
We've just walked through the entire transformation from an emotional, gut-feeling approach to a systematic one. We've seen how having a clear set of rules for what to buy, when and when to sell can give you a massive edge. So the question this leaves me with for you is, after seeing this blueprint, what's going to be the very first rule you write for your own system?